I think that Bitcoin will outperform the S&P index. And I think it's very simple as to why it will outperform the S&P index. It doesn't have the counterparty risk of corporate structures, and it doesn't have currency exposure, right? So the S&P is saddled with a huge amount of corporate risk factors, dozens and dozens of them, tariff, supply chain, etc. Bitcoin's going to have the higher Sharpe ratio. Bitcoin's going to have the higher vol. Bitcoin's going to have the higher performance because it's engineered and it's accessible. There's going to be someone in a country doing something with capital that you don't understand, that's illegal in your country, that's going to make you money.
Michael Saylor is once again at the forefront of what could be the most explosive period in Bitcoin's history. The founder of MicroStrategy explains in his most recent comments why the market is now poised for a Bitcoin breakout in late 2025. Saylor describes how Bitcoin is changing from a speculative asset to a global reserve standard, citing factors like the surge in institutional demand and the expanding participation of financial giants like BlackRock and Fidelity. He underlines that a new age is upon us, one in which governments, corporations, and sovereign wealth funds will all have to deal with the growing power of Bitcoin. Saylor contends that Bitcoin is now a strategic requirement rather than merely an investment, as seen by his company's continued aggressive BTC accumulation. We'll explore Saylor's audacious forecasts, the macroeconomic trends he's monitoring, and his reasons for thinking Bitcoin will be widely accepted by 2025. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Over the long run, I'm curious how you think about that in the context of the long-term growth rate of Bitcoin.
Yeah, well, I mean, you can look at the history, right? Bitcoin's been decelerating from 120% a year growth to 100% growth to 80%. It was clocking at 80, 90% when I got into it. It's been about 55 to 60% for the past 5 years. Why is it decelerating? Well, obviously, for the law of large numbers, when you've got a $100 trillion asset, you're not going to grow 80% at that level. It's decelerating because it's merging with the capital markets, and as it merges with the capital markets, then there's less and less money. It's harder. I mean, anybody knows $1 million company can grow faster than $1 billion company, which can grow faster than a $10 billion company, which can grow faster than a $100 billion company, which can grow faster than a $1 trillion company, which can go faster than a $10 trillion company, which can grow faster than a $100 trillion company, right? Not complicated. It's simply the law of large numbers and math. The 20% target is, if I look at it, if you want a bucket of the most high quality scarce capital in the world before Bitcoin was the S&P index. It's basically equity capital that's managed, via buybacks in order to stay reasonably scarce. And you know what that benchmark is. It's been about 10% a year for 100 years, right? So what are you going to get from the S&P? 10 to 12%, 10, 13, the actual amount's going to be a function of the growth and in the equity plus the expansion of the money supply. I think that Bitcoin will outperform the S&P index. And I think it's very simple as to why it will outperform the S&P index. It doesn't have the counterparty risk of corporate structures, and it doesn't have currency exposure, right? So the S&P is saddled with a huge amount of corporate risk factors, dozens and dozens of them, tariff, supply chain, etc. It's got legal risk, it's got political risk, it's got physical risk. I have warehouses, I have nexus. There are a lot of things in the real world that constitute risks in the S&P. If I strip away the physical risk, and if I strip away the political risk, and if I strip away the management risk, and then every company takes in cash flows and pesos and naira and euros and CNY and rubles and dollars and Canadian currency and AUD and whatever. So when you strip away all of those risk factors and keep the pure capital, you've got Bitcoin. So whatever those things are, Bitcoin will be more than that. How much more? Or like what is the cost of that? 6 to 8% a year. So if you're targeting the S&P at 12, you target Bitcoin at 18 to 20. Why will it be 18 to 20? I stripped away the risk factors. I also stripped away the constraints for example, you cannot go long 50x on Apple stock on Sunday morning in Iran, right? You can't, right? We could talk about why you can't, but you just can't. So you can't go long, and you cannot short an equity 20x on Sunday morning. So you have all of these guardrails on equity, and they limit the leverage, they limit the utility. If I had pure capital and I could have unlimited leverage, unlimited utility anywhere in the world, 24/7, 365, there are no holidays for Bitcoin, right? So what happens on a bank holiday to a security that you should short or you should go long? Well, you can't. Okay, so that bucket, that benchmark, which is the S&P, it's less volatile, it is less liquid, it is less useful, it is more risky, it is more diversified, and it's got some human factors in it too. I mean, the S&P board just decides what to put in it, right? Like maybe they don't put the right thing in, maybe they leave something that shouldn't be in it, right? So if you're looking for a pure objective monetary index governed by the laws of nature, the most useful type of capital asset in the world to everyone under all circumstances at all times, that's Bitcoin.
Michael Saylor is certain that the cryptocurrency business is poised for rapid expansion. He thinks a huge upswing is imminent as big companies like BlackRock and other financial behemoths are getting in. They predict that there will be more than 1 billion active cryptocurrency wallets globally by the end of 2025. This expansion is occurring at a rate that has never been observed before, and it may present one of the largest possibilities for wealth accumulation in history. After years of study, markets are mostly driven by liquidity, and cryptocurrency, particularly Bitcoin, is expected to outperform all other asset classes in the years to come. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Yeah, if I were to say it ought to be twice as performant as the next best thing, that wouldn't be unreasonable. My forecast is it's probably 50% better, maybe 60, 70% better than the next best thing. So my long-term forecast is like 21% ARR and 21 vol. And I would say, the S&P will be more like 10% ARR, 15 vol. Bitcoin's going to have the higher Sharpe ratio. Bitcoin's going to have the higher vol. Bitcoin's going to have the higher performance because it's engineered and it's accessible. There's going to be someone in a country doing something with capital that you don't understand, that's illegal in your country, that's going to make you money, right? Right? The redneck in Arkansas with Bitcoin buried in their backyard is going to make money off of some rocket scientist in Singapore or Beijing doing something with some capital they've never heard of in a way they can't understand, that's either illegal, and they'll be doing it while the guy in Arkansas is sleeping, but the dude in Arkansas is making money. So this is the highest common denominator. Whereas, an American company that owns stuff in Arkansas is not getting its value increased by some Chinese actor, right? Or some there's no nation state central banker that's going to do something to enhance your Arkansas strip mall or your whatever best idea. So that is the basis of my assumptions about the long-term performance of Bitcoin. Obviously, it's all driven by some base rate assumptions. One base rate assumption is how fast does the money supply expand? Another base rate assumption is how rapidly does technology improve and how much productivity is driven by technology. And if you're bearish on technology and if you believe inflation is going away, then you would probably have a lower estimate than me. The whole premise of John Bogle and the Vanguard 500 was human decision making is inadequate compared to the market, and will generally be, the market is smarter than any individual's opinion anyway. So passive investing outperforms active investing most of the time, and Vanguard has lots of large passive funds. And once you understand that, you realize that the core premise of a Bitcoin treasury company is we're driving Bitcoin adoption, by capturing equity investors who can never by mandate buy a commodity. I mean, in our last presentation, we showed $35 trillion of discretionary capital for equity investors versus $700 billion of discretionary capital to invest in commodities, right? So that's 50x as much. So 50x as much capital can flow that way. Then Bitcoin treasury companies are creating an on-ramp for credit investors, right? Because there's $65 trillion of that we showed. So there's even more credit, not quite 100x as much, but 95 times as much capital to buy credit instruments as opposed to commodities. And then this Vanguard example, which is also the S&P example, is there's a set of investors that just park their capital in index funds. They don't make a decision. It's all passive capital. Passive capital locked up in the S&P or the NASDAQ 100 or the MSCI index or total stock market indexes, they can never buy the commodity. They can never buy Bitcoin. They can never buy silver, gold, or palladium. Doesn't matter how good it is. You could record 18 million hours of Bitcoin podcast. You could give away the Bitcoin for free. They're still never going to buy it, right? Because they can't. Because the capital markets in the world are structured.
Michael Saylor outlined the reasons why Bitcoin performs better than any other asset and why he thinks this trend will persist over time. In contrast to the S&P 500, which he projects will return about 10% yearly with 15% volatility, he projects that Bitcoin will provide approximately 21% annual returns with higher volatility. Saylor predicts that Bitcoin will outperform traditional assets in terms of performance, upside, and efficiency, and that it will have a higher Sharpe ratio, which indicates better risk-adjusted returns. He also emphasized how global Bitcoin is. You will profit simply by owning Bitcoin, and anyone, wherever in the world, even if they are doing something you have never heard of, can add to its value. Because Bitcoin is open and decentralized, anyone in Arkansas can profit from innovation occurring in Singapore. This isn't true for conventional assets like real estate or small businesses. Saylor continued by outlining how Bitcoin is being incorporated into the financial system in a way that permits money to move into the cryptocurrency indirectly through businesses like MicroStrategy, or what he refers to as Bitcoin treasury companies, from stock investors, credit markets, and passive funds. These businesses include Bitcoin on its balance sheet, and since they are listed on a public exchange, they give investors access to the cryptocurrency even if their investment policies forbid them from directly purchasing commodities. He also drew attention to the stark difference in the amount of capital accessible. Only $700 billion is available for commodities, whereas $35 trillion and $65 trillion are available for the credit and equities markets respectively. Since many institutional and individual investors can't directly buy Bitcoin, remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.